Hello, retail traders. Welcome to the Sneaky Snake Trading Strategy, where we trade off chart patterns, candlesticks, and being in the now. And I want to talk a little bit about this coming week. The bill, for one thing, the debt ceiling bill, I think will be signed. Probably, it's all an act, I think, and it'll definitely get reconciled with maybe a victory on the GOP side. So we'll see about that. Anything to cut a show of some kind of cut spending, and I think the government will go along with this just to make them look good going into an election. So I want to keep a good eye on how the market. Last week we started a very volatile market, and it was fun to trade. It was really fun to trade. The bears definitely had the bulls in a chokehold, but the bulls came back and fought and recovered at the end of the day of each day when we started getting very volatile. And about 3 weeks ago, I brought it to the room and mentioned it. I said, where do you think we are on this map? And I said, I think we're at a place of euphoria and anxiety, that people are not realizing that we're at a top, and that it would be very nice to have a little pullback. It usually happens about this time of the year. Was it sell in May? They was saying, how's that go? So yeah, I think that we're getting down here to where we're at capitulation and discouragement and dismay. And once the bill gets signed, we'll start having a little bit of hope. But I think we've definitely had 3 good weeks of fear, despair, and panic. And I just think now we're going to start curling up, and we're going to start getting into that capture of hope by the end of the week, if not sooner. We still might have a little bit more shakeout going on, but I want to show you in a few charts where I think we are, and where I do think we are finding a support, and if we dip below it, it could get a lot worse. But this is the greed buy map. You're willing to copy and paste it, and always ask yourself, where do you think you are on this map? Now, I had a debate with somebody this weekend about, someone said charting doesn't matter at this time, and it just drives me nuts when people talk like that. Charting, to me, predicts the future, but it's the algorithm about being in the now is how you want to take your trade. So, you know, if you're in the greedy part, you don't want to be as generous as you would be if you were down here when the best time of buying is down here at fear. So, you know, I always like to bring that up. I don't like to go hog wild when everybody's, you know, cheering on the market and everything's at an all-time high. I'd rather buy at support, because the cycle just continues back and forth, back and forth, back and forth, if it's in an uptrend or a downtrend. So buy at support and sell at optimism or at euphoria, at anxiety. When you start reading the headlines and they start to change, that's when your algorithm ought to kick in, of being in the now, and start trading the market in a different fashion. So let's go straight to the VIX. And I was looking at my Sneaky Snake watch list, and I also want to bring up the VIX and a few of the indices. I noticed here on the weekly chart on the 3-year that the VIX was down here at a bottom, where we had that nice little bounce during COVID, the year of 2021. Then we had that sell-off. You can see it in the pattern, how every time it hit support, it would bounce. Hit support, it would bounce. Now we're down here to this lower support that we had back then, when the market was just in a total sell-off, and we found bottom. So I think we've got to watch this candle and see if it breaks 1814 on the VIX. And if that happens, that'll be the 9. I think that'll be enough to bring it back up and run it at least to the next resistance of right around 2265. Now, a few in the room traded this Friday to the downside and did very well on it. I was very impressed. We got the SPY. Let me see, where is that VIX, so we use the same charts. Excuse me. Have a little bit of latte. So here's the SPY. This is on the weekly. We bounced off the 200. Now it's still up here at resistance. SPY hasn't been hurt that much, and it's still bouncing off. This is the weekly time frame, and it still held the 9 EMA last week. Now I'm going to change this to the yearly and see if we get a different kind of pattern. It's kind of got a we could dip down one more time. That'd be real nice. That'd be a triple bottom off the 51 EMA, and that would be right at my 406.94 if we dip down. If we had a real rough week and we want, the fat cats wanted to bring it down to that triple bottom off that 51. So we bring this now to that's the daily. So that looks kind of bullish. That's a hammer. These are all kind of bull flags on the weekly or on the daily. But now I'm going to bring it up to the 20-day, and that can give me a different, totally different picture of how I'd want to trade this stock. Even though that chart looked kind of bullish, this one looks a little bit more bearish. And I would rather wait for it to come back down here, maybe to the we've got to create a shoulder line. This what you got here is an inverse head and shoulders. You got the same exact pattern right here. The same exact pattern. Watch, you have the dip, up, and then the breakout. Dip, up, and then the breakout. Same exact pattern. So you want to, history has a tendency of repeating itself. You've got a downward wedge right here, downward snake. And then it had a triple bottom, 1, 2, 3, and then bounced up. Same thing here, triple bottom, 1, 2, 3, bounced up. Triple bottom right here, and this thing could hold support right here and be very strong into next week and break up to the high or pull back to this triple bottom on the 20-day. Now I'm going to go in here and look. We got a shoulder line right here. This is a shoulder line, kind of a tough inverse head and shoulders to see, but with experienced eyes, you want to go ahead and put in a support level right here on the top of this mountain. That hits that bottom of that there snake right there where it dipped down. See that top and that bottom, and then you have that kind of equilibrium right in here at the same spot. So we're going to go ahead and draw that in as a support level. And I want to set an alert right on the top of this candle right here. See the bodies of these candles? That's where I'm going to set that alert. Set it at mark and below. So that's going to be number 1. This is going to be number 2. And then we're going to call a triple bottom for number 3. Well, this is the shoulder line right here. So we'll alert us. Next, see the shoulder come down here? And then you got the head. And then you got the neck right in here. Same thing right here. So you want to take this shoulder, it's the same shoulder right here, and hopefully we can have a triple. We'll set one more third alert, and this will be a very strong buy at 406.07. And that'll be a triple bottom off the shoulder. So that's how I'm going to look at it this week. So far we're declining. We almost, well, this is a little bit lower than that candle right there. So we are declining a little bit. We could have another sink down and then have a triple bottom and then come back up and break the Darvas box on the $20 time frame. And we did have a touchdown here on 30 on the RSI. So I'm watching the RSI in this trade. So there's my 3 supports. You're willing to copy and paste that down and write them numbers down and see if they come into if they come out next week and if we hit them targets. I left a lot of money on the table last week, a lot, and I'll show you something here on the 5-day. This was an amazing chart last week. We had a triple bottom, and I called every one of these out last week, and I left so much money on the table. I had a lot going on at work. I had just really a busy week, and I couldn't concentrate enough. I property manage a property, and then I guess that's what I do. But this was a great, one of my favorite tradings is these patterns right here. These big, huge spreads is what I like to trade. I don't like these small spreads aren't fun. They're boring days, but when you get into days like this, and you got a lot of volume kicking in and a heavy sell-off, just stick around and wait for it to find a bottom, and then chase that sucker back up to the top every day. Boom, to the top. I mean, back to the top. And who knows, this could sink down and hit my final supports, or we could triple bottom, like I said, even on the 5-day. Just came back and respect that 5-day. So I'm coming here tomorrow, and if I have a double bottom from yesterday's low, I'm going to take that trade. I'm going to be ready, especially if it dips down pre-market and hits that support right there, and then we'd have a double bottom. I called this out Friday and made a ton of money. I was down quite a bit, and the thing reversed, and I ended up selling and doing very well. But I didn't take it all the way to the top. That's what's. It would have been one of my best weeks last week. If I bought every bottom, and if I'd have sold at the top, it would have been one of my best weeks. So I got to kind of improve on that. But keep an eye on the triple bottoms. They've hit so many of them this year. Even in the daytime, 1-minute time frame, the hour time frame, the 5-minute, the 15-minute. Just keep an eye on triple bottoms. It doesn't matter what time frame it is. And I think that's about it. I wanted to go over and look at the SPX. We'll look at the weekly first and see where we are on this weekly. I always like to look at the weekly when we're in a downtrend. See, it hasn't moved that much either. We've had some real good pullbacks on this thing, and it's bounced back up above to where resistance is, which is the top part of this here candle right here. So she still looks good. Now, if you're looking at the weekly, and you come in here Monday, and this thing's back down to this 40-50 area, you'd have you a triple bottom. Man, that'd be to me, on a weekly time frame, that'd be one heck of a buy. So I'm just going to put an alert in here for right now, just to have it in here, and then I'm going to pull it up on a different time frame and see if it correlates to anything that looks tasty. Put it on yearly. Oh gosh, these are up in here. Okay, this has got to go. Put it on 20-day. That was a good call on this thing Friday. All last week. I mean, I hit the bottom on these things, and then I sell them for $200 or $300 a contract, and then they go up to $1,000. In minutes after I get out, yeah, I mean, this is a good spot right here. I got to raise this alert up and hit the bottom of that. So I'll hit the bottom of that. I'll show you where I set that at, right here at the bottom of that candle. No, yeah, that runs right into the bottom of these two babies. So I knew that was important. So I'm going to draw a trend line right there. Should raise it up just a little bit more. I'd like to raise it up above that 41.01. There's my alert. So let's see what happens. I got 3 separate alerts on SPX. If we hit that bottom one, 41.01 or 41.02, 41.05 area, 41.07, might take this trade and run it back up. But I think we could hit that easily this week and be back in it again. That's beautiful. See, there's a triple bottom, double bottom on the, if you look at the 30-minute time frame, and you do have some more support down here, you got a couple of gaps. So it can easily fall back down to this lower section. We'll just pay good close attention to it. If it holds that, we're still bullish. We'll run it back up to the top of this here Darvas box. That's a 10-day Darvas box in the 30-minute time frame. So yeah, so I shuffle around on time frames a lot because it gives you a different perspective on how to look at a trade. If you're looking at a weekly time frame, you could say, oh, we're at resistance, I don't want to take this trade, especially, you know, with all this crap going on right now. Or you look at it differently, think, well, we're a lot of crap going on right now, and we haven't really pulled back that much. Maybe she's poised to break out again. Then you look at the yearly, and it could give you a totally different perspective on how to take a trade. Like, you know, maybe this thing looks like it could fall back and hit this triple bottom instead of breaking out at that point like it did on the weekly. And then you look at the hour, it doesn't matter what time frame you use in your strategy, just uniformly use that structure. Like, you know, this triple bottom really looks tasty to me. You know, bounce off the 50 here or the 200 SMA and run it back up. A lot of major supports are down here, heavy duty ones. So different time frames, you know, can give you a different view, a different perspective, maybe a cleaner view on what to take, like the double bottom here. And this is just on a 30-minute. You change it to a 15-minute, 5-day. Still play that double bottom, but she did break below it. You know, that could have probably shook you out of the trade compared to a 30-minute. So get used to using different time frames, and they totally look different. Like here's my signature trade on a 5-minute time frame. This is what made me a lot of money in the past year and a half, is catching these snakes, and once they break out of the channel, that's when I catch my attention and it pulls back to a double bottom, and then finally we have the breakout here of the triple bottom on the low, and boom. But that's it. Snake, breakout, pull back, boom. And this development of this strategy is safe. It gives you plenty of time to take the trade and realize for it to develop into a pattern. Well, that's it. I just kind of wanted to have a little seminar and go over how I feel about the market. Probably went on a little bit too long because I started explaining things again like I always do. But pull up your map and ask yourself, where are we on here? Where do you think we are on here? And then test yourself and see, because I nailed it perfect. I mean, everybody was pretty excited about the market, and that's when I get my chemistry starts to change. My algorithm starts to change when people start getting too excited and too confident. And it wasn't, and within that next day, you could tell that the market was starting to go into a downtrend. Now I think we're down here. I think we've had 3 good weeks. We've had fear, despair, and panic. Panic was last week, as I showed you in the chart on the SPY. You pull up this 5-day chart again, and it's a panic. See, a lot different than what it is here. We had a little panic right in here too. But last week was kind of a consolidated panic in the Darvis box, and it was just too easy to read. We almost pulled back to that there. We did pull back to the shoulder line, but this would have been a solid buy right down here. 408. If it pulled on down there, I'd have went probably full horse. But still, yeah, we hit the double bottom, and that was the triggered alert. So just keep in mind, these charts, they tell a story, and if you can just look at it and realize, okay, what is it telling me? You know, we had a snake here, we had a triple bottom right here on a downtrend, and then boom, pretty easy to tell. We had a double bottom here on Friday and called out right into close. You could have made a ton of money on that trade. That's what I said. I left a lot on the table. I got in them, but I sold early. That's it. Y'all have a great day. Sneaky snake trading strategy.